Welcome to EAGTAX and our tax advent calendar, where we will be sharing tax tips and explanations in the lead up to Christmas. For day 16, we will be covering investors' relief. Like business asset disposal relief, qualifying gains attract a 10% capital gains tax rate. Unlike business asset disposal relief, the lifetime allowance for qualifying gains has remained at £10 million. Shares which attract this relief must meet a number of conditions. Firstly, they must be subscribed for. This means the company must issue new shares to the investor and the individual makes a cash payment for the shares. Spousal transfers are permitted without tainting this relief, however. The shares must have been issued on or after the 17th of March 2016. The investor must own these shares continuously from issue until sale. When the shares are issued, none of the shares or securities of the company can be listed on a recognised stock exchange. The shares must be ordinary, both when issued and at the date of sale. The company that issues the shares must be a trading company or a holding company of a trading group when the shares are issued and throughout the shareholding period. At no time in the shareholding period can the investor or a person connected with the investor be a relevant employee. And lastly, the period beginning with the date of the share issue and ending with the date of the sale must be at least 3 years. With respect to the relevant employee condition, there is an exception for unpaid directors of the company who, prior to the relevant period, have not been involved in carrying on the whole or any part of the trade by the issuing company. However, there are some permitted payments that can be made to the director. A person will also not be treated as a relevant employee if they become an employee of the issuing company more than 180 days after the commencement of the relevant period, and there must have been no real prospects that the investor would become an employee at that time. Trustees can also make a claim for investors' relief if it has a qualifying beneficiary, and they elect to use the beneficiary's available lifetime allowance. Please note that the shares can lose their qualifying status if the investor receives value from the company in the year before and up to the third anniversary of the share issue. We hope you found this useful. Please take a look at our website for more information and our contact details at eagtax.co.uk.